Hi, kumusta? Hello everyone. Here in Canada, we have the option to get a variable or fixed interest mortgage. Back in 2021, my friend signed up for a variable interest mortgage which was very low at the time. However, now his interest is 7.2%. The lowest 5-year fixed interest rate that I have seen today is 4.14%. Would you like to know how much money is the difference between a 7.2 and 4.14% interest? Join me in crunching the numbers. All right. We will create a schedule of payment for a $230,000 loan, which is about how much my friend is sitting right now, with a 7.2% interest. We will use a term of 25 years with monthly periodic repayment. And then we will copy paste that into the side of the worksheet so that we can then change it to 4.14% interest and compare it side by side. I will be using Excel in this video, but you can also use Google Sheets if you want to follow me. All right, let's get it on. So the principal is 230,000. The variable interest rate is 7.2%. The term is 25 years. And we want to repay monthly. Alright, so let's create a table. Period. Monthly pay. Interest pay. And then principal repayment. And then balance. All right, at the start, we will have $230,000 loan. Let's put that as month 0, and then we go month 1, month 2, and then we should have 25 times 12 is 300, so we should have 300 rows. If you are doing semi-monthly, it'll be 600 because there will be 24 periods there per year. If you're doing bi-weekly, then it will be, sorry about that, it will be, wow. There are 52 weeks in a year, so it'll be 26 bi-weeklies. Okay, now the formula for monthly payment is equals PMP. The rate is that up there, divide by 12 for monthly. And then the number of periods is that term times 12. Then the principal value or present value is that. Okay, let us expand the width of this to something like maybe that. A little more. Okay. Okay, let's change this so that we fix this reference and that reference there to $10 and that reference there. We're fixing it because we're going to copy it all the way down to row 300, months 300, I mean. So the principal interest repayment is, the interest repayment formula is equals IPMT. The rate is that again divided by 12 for monthly. And then the period is this one. And the number of periods is again that term times 12. Present value then is that. Alright, and let's fix again that, that. We will leave 8 because that has to change when we copy. There you go. Principal repayment will be the difference between the monthly payment less the interest, right? So that's what goes to your principal there. And that is a negative value, so the running balance will be that plus the negative value there. There you go. And now we will have to copy all this all the way down to 300 months. There you go. And then we will check if we repay it in 300 months. Oops. There, 0. All right. Okay, now we are going to copy all this on the other side here. Control C to copy, the right arrow going there. Let's paste it here. Okay, let's change this code is fixed. And then we put 4.14 is the interest now. Yeah, automatically changed. So let us verify if that got repaid in 300 months. There you go, 0. All right. Now we can do some comparison here. So the difference between the monthly payments is 423.18 every month. Wow. Well, that's a lot. How much is that in a year? Times 12. 5,078. There's a lot we can do with 5,078. I would put that in my TFSA. Comment what you would want to do with 5,078. Maybe travel? Let's take a look at how much interest did we pay for a year. Well, that's on that side. Let's try the other side. Alright, that's how much we're paying. What's the difference between the two? That minus this. Okay. Here, between 7.2% and 4.14%, we paid, the difference in payment is 5,078 in a year, but the difference in interest is 7,000, so it's bigger. That can only mean that the principal repayment, because that's where we're taking it from, is going to suffer. So how much is that? And that should be the same if we check the ending balances in a year, right? So let's try that. Minus, is that in 1 year? Yeah, 1,948. 49, sorry. So what does this tell us? The difference between 7.2% and 4.14% interest in a year would amount to 7,000, the total of the two. 5,078 plus 1,949 is 7,000 some, $7,000. So how could we use that information? I think, for example, for my friend, if he is considering to move out of his current 7.2% and go to another lender, what usually happens is that you will have to terminate your loan and then your lender will penalize you. Let's say, for example, though, that the lender says, okay, we will penalize you with $4,000. But based on this computation, you know that 4,000 is less than 7,000. So you know that you are better off moving out of that current 7.2 and go to that 4.14% interest, right? Assuming the variable rate doesn't change, there are mixed messages about the variable rate that maybe it will go up, maybe it will go down, but I don't know. Comment below what you think. Is it going to go up? Is it going to go down? All right, I hope you guys find this useful and interesting. And if you do, please like and subscribe. Thank you very much for joining me through this number crunching, and I hope to see you again on my next video. Bye for now.